Today's show is brought to you by XTrackers by DWS. Imagine harnessing the power of global transformation investing in artificial intelligence, critical technologies, semiconductors, and green energy. With XTrackers' innovative thematic lineup, you gain access to the ETFs that target these transformative sectors. It's more than investing, it's aligning with the innovations that are shaping tomorrow.
Whether you're a seasoned investor or just starting out, XTrackers makes exploring new opportunities seamless. Find out how at xtrackers.com. Together we grow. All investments involve risk, including loss of principal. Information on the fund's investment objectives, risk factors, charges, and expenses can be found in the fund's prospectus at xtrackers.com. Read it carefully before investing. Distributed by Alps Distributors, Inc.
Welcome to Animal Spirits with Michael and Ben. I was thinking about this during our episode last week, how when we're talking about the AI, is it a bubble, is it not a bubble, will it pop, won't it pop? And we're providing nuance because markets aren't black and white. Of course, I don't know. You don't know. Nobody can see the future. But I was thinking about it from the point of view of the audience. And I think the audience must absolutely hate it because if you're listening to somebody talk about a basketball game, a football game, and they're talking about it like beforehand, well, on the one hand, like Daniel Jones is playing really well, but on the other hand, this defense, blah, blah, stop. Just who's going to win? I want to know who's going to win. I'm betting. Tell me who's going to win. And I think when you're consuming content, you want to be able to at least point to somebody and say, I'm so glad I listened to that guy because he like got me there, or that asshole. I can't believe it. Like, so people need a scapegoat or somebody to like root for. So I'll do it, Ben. Okay. Hedges off. I think that this AI trend takes the S&P 500 to 10,000. Obviously not in a straight line. There's the hedge. There will be corrections. I do expect a 20% pullback before we get there. But that's it. And hey, if I'm wrong, I'm sorry. If this is a bubble that pops tomorrow, my bad. I will admit it. I didn't see it. I saw the arguments for it, but I'm on the other side. I think we're going to 10,000.
All right, I could see you going this way because of our show that we did in Vegas. You were getting more bullish the further along we went in the show. And that's going to be released, I think, Saturday. Here's the thing, though. There are enough assholes out there who will give you extreme predictions. Most people need a Grand Rapids hedge. And I think that's what they come to us for. If I'm putting probability, and I'm a probabilities guy, I feel like it's rare that you should say always and never in the markets. I would lean more towards this thing is going to get way stupider and insane than it would like, oh, this is going to roll over tomorrow. That'd be I can't imagine we haven't seen this thing get. If it's going to be one of these things and AI is going to be as transformative as people say it is, this has to get crazier. It has to.
Yeah, you ain't seen nothing that. I mean, I know there's just one stop. What is Meta flat for the year? Like,
here's the thing. I think
what is this, a bubble for ants?
I think you stole that from me. Did you see my tweet? That was a pretty good one. I said Meta, Amazon, 4 out of the 7 Mag 7s, I can't remember which ones, are up less than 10% this year.
Say that one more time.
4 of the 7 Mag 7 stocks are up less than 10% this year. And my comment on Twitter was, is this a bubble for ants? I think you have to have...
I might have stolen it from you. I don't remember the tweet, but it's certainly possible.
It's not like it's that original.
Right.
Here's the thing. I feel like everyone is assuming that the market is guilty until proven innocent. And you have to assume the market is innocent until proven guilty. I think that's the problem people have had this whole cycle, is assuming that it's guilty until proven innocent. And it's been the opposite. Right?
Yeah, it's so easy. There's so many bubble anecdotes of like, come on, guys, how do you not see it? Like the Sam Altman stuff last week, right? Like, how do you not see that there's some chicanery going on here? And by the way, if there's a bubble, that's the bubble. It's OpenAI.
Yes, they'd be the main culprit, which is kind of funny because they're not public. Whatever, all the public companies are tied to them.
Okay, so getting back to what the audience likes and doesn't like, here's a segue, Ben. This is called a setup, I think. I think we have a decent idea who's in our audience, but like not really. I think we just say like, oh, we have advisors, we have like DIYers, we have sort of everyone. All right.
We have a lot of just normal people too that just have jobs outside of finance.
Yeah. So we are going to be conducting an audience survey. We would love to hear from you. We will put the link in the show notes. I'm very curious. I don't know. When's the last time we've done this? It might have been 4 years. It's been a while.
It's been a few years.
It's been a while. So please, if you can, help us out. Obviously, it's anonymous. We're not going to bother you. We're not selling your data, but
Yeah.
we'd
If
love
we've ever
to.
done anything for you, do this for us. How's that?
There we go.
Also, nice sweater today. Good sweater game.
Thank you. This is a marine layer sweater.
Oh, I can tell. That had
and
to be.
it's quite comfy. You know what's nice about it? Actually, you know what? Let's do this for a second. So it's very like warm and soft on the outside, but it has different material on the inside, so it's not like sticky. But I am, as you know, Ben, I am a sweater. I know I'm wearing a sweater, but I mean I sweat.
Mhm.
I am one of those people that
You
sweat.
glisten.
Yeah. And so I'm very particular about my undershirts. However, I'm not actually even. And this is the ridiculousness of myself. And I know it feels weird to talk about myself in the fourth person, but I am very particular about what I wear underneath my shirts. But guess what? Here's the paradox. I don't have any undershirts. I just wear t-shirts underneath like a complete moron. And I don't know what's taken me so long to find undershirts that actually fit and are the right material, don't make me sweat too much, because there's a few types of fabric that when they touch my skin, it's over, sweating immediately.
You need like a breathable thing.
Okay, so what am I talking about here? This must have been an Instagram ad that got me. Tommy John undershirts. Holy moly. My life, I will never not wear a Tommy John undershirt unless something dramatic happens. I'm loading the boat.
You're like a new guy. New socks, new undershirts, man.
Well, but these are the things that matter. What took me so long? I'm wearing like old Gap shirts that are like 7 years old as like under it, and then you could see the what is this? The neckline. I mean, it's all Tommy John's.
Also, Marine Layer, they owe me some free clothes. You know how many people I've said to Marine Layer because of the stuff I wear on the show to them? Hey Ben, what sweater are you wearing? Hey, here's a link to Marine Layer.
It's great. It's great.
I'm not saying they need to. I'm not saying they need to advertise on the show. I'm saying they probably just need to be sending me some free clothes. That's all. I don't ask for much. All right, I'm ready to go hard to the paint today because I'm sick of the negative narratives. I'm so sick of them. It beats me down. Like the negativity. You a couple weeks ago, this was you. You said you're sick of the negativity. I am too. Okay.
Yeah. Take the baton. Run with it, Ben.
All right. I'm sick of the K-shaped stuff. I'm sick of it. Okay. Let's look at this. Let's look at the facts. This is from the Wall Street Journal. Feeling great about the economy? ? You must own stocks. Investors' rosy feelings about their stock market gains are powering spending, but it's a different story everywhere else. Okay, sure. They show this consumer sentiment, and there's like a tiny little difference between the biggest stockholders and all stockholders and non-stockholders. It's like this much, okay? Consumer sentiment is crashing for people who don't own stocks. Okay, fine. They say like it's a different story for everyone else who doesn't own stocks. I get it. And then they show that the fact that, the percentage of people held by the top 20% of earners is 87% of stocks, right? They show this guy who, this is kind of funny. This guy sold some of his stocks to buy a Porsche. Remember we had the Porsche conversation? Duncan, guess how much he bought his Porsche for? $22,000 for a 1999. We were saying it's impossible to find a Porsche for around $20,000. It happened. This guy said, I made a bunch of money in stocks. I bought a Porsche, whatever. Here's the thing. 62% of American households own stocks. This number was way lower in the past. A majority of American households own stocks. Guess what? If people are feeling better because of the stock market, most people own stocks. Okay?
I'm so glad to hear you say this.
Look at the bottom 50%, how much they own in stocks. This thing has quadrupled since 2020. The bottom 50%, okay, own way more in stocks. Do the top 10% own a lot of stocks? Yeah, they do. Do more people than ever before own stocks? Yes, they do. Peter Thiel has this thing. You saw this email that was going around from Peter Thiel from 2020?
No.
I feel like this almost has to be fake, but Peter Thiel sent an email. And there was a story about this in the Free Press. He just sent it to Mark Zuckerberg and Mark Andreessen and Sheryl Sandberg. And here's what he says. I would be the last person to advocate for socialism, but when 70% of millennials say they are pro-socialist, we need to do better than simply dismiss them by saying that they are stupid or entitled or brainwashed. We should try to understand why. And from the perspective of a broken generational compact, there seems to be a pretty straightforward answer to you, namely that when one has too much student debt or if housing is too unaffordable, then one will have negative capital for a long time and or find it very hard to start accumulating capital in the form of real estate. And if one has no stake in the capitalist system, then one may well turn against it. Which actually, that's a really good point.
Yeah.
It's a really good point. Here's the problem with this idea. It's totally vibes based. He's basing this on social media and vibes, not data. If you look at the data, look at this. Gen Zers, millennials are less likely to own homes than their parents at the same age, but look at how much less likely they are. Gen Z is still growing in terms of home ownership at their age. At age 27, 33% of Gen Z own a home. For millennials, it was roughly the same. For Gen Z or Gen X and baby boomers, it was a little higher. Okay, it was like 40%.
I'm with you, and I love that you're cooking because I'm on the same exact. Not only are we on the same page, Ben, we're on the same word. Okay, because I saw you put this in the doc, and I was about to be like, dude, what are you talking about? The gap between these lines is nothing. So I'm so glad that we're saying the same thing here because I was going to make the same point. However, I do think this particular chart is. I throw this out because we don't. Two things. Number one, I've said this a million times. Nobody compares themselves with a prior generation and feels either better or worse. Like that's not relevant. What's relevant is that there is an affordability crisis right now for young people. There just is. So this chart is bullshit, but keep going.
Okay. You just took some of the thunder off of this, but okay, Gen Z.
No, keep going.
Okay, on a inflation adjusted basis, Gen Z is richer than any other cohort at this stage of their life. Way richer than millennials, way richer than Gen X, baby boomers, silent generation. They have way more money on an inflation adjusted basis. The value of equities held by people under 40, you shared this with me a couple weeks ago from Citadel, is up 300% since 2020. This is people under 40 own 300% more stocks. Okay? So my point is, yes, there are some bad things. And obviously the cost of living, the student debt thing, the cost of living, the affordability of housing, that has to be weighing on people. But I feel like we're totally brushing aside all these other positives as well. And I think the problem is, and I've mentioned this before, there's probably greater inequality among young people than there's ever been before. And if you see that there are young people that are doing well and they bought a house and they can afford it and they got a 3% mortgage and you didn't, you are so pissed off. And I totally understand that. But I don't just want to say like everyone is screwed. And I also think to the young people thing, I just have more faith in them than any other. I know people think social media cooked their brains and they'll never be able to own a house and they're going to live in their parents' basement forever. I don't accept that. This is the most educated, tech-savvy generation we've ever had. I think they're going to figure it out.
I totally agree with you, Ben. And yes, there is inequality within young people like there is everywhere. We spoke a couple of weeks ago about how Gen Z cardholders at American Express are their fastest growing spenders, up 39% year over year, make up an increasingly larger percentage of the pie that's spending. So I was thinking about this yesterday or 2 days ago as Josh and I were at FedEx Field. What a dump. Almost makes MetLife Stadium look habitable. It's not. Those are the two worst stadiums in the NFL.
Can't believe you guys went to a Lions game without me. They look pretty good, right?
Great team. You know, when they stack Laporta and Amon-Ra and Gibbs is in the backfield, it's just impossible.
Yeah, they have so many weapons. Yeah.
And JMO on the other side, forget about it. It's not fair. Okay.
It's a really fun team to root for. Yeah.
Yeah. So about a third, maybe, of the fans there were from Detroit, like an incredible number to the point that they drowned out the Commanders fans dramatically, like audibly, dramatically. And I said to Josh, dude, this is what I'm talking about. You think all of these are like descendants of Henry Ford? These are all deca millionaires that are traveling? Come on, is Detroit a coastal elite city? Like, I just don't buy the narratives. And obviously narratives matter.
Think about how much money it costs to fly to DC, stay in a hotel, go to the game, tailgate, tickets to the game, food at the game. That's a really expensive weekend.
There was 10 to 15,000 people from Detroit there. So Howard Marks wrote recently, he weighed in on private credit, and he said, one of the most prominent characteristics of the financial markets that I've detected over the years is their tendency to obsess over a single topic at a given point in time. The topic eventually changes to another, but before it does, it's often the thing people want to discuss to the near exclusion of everything else. So he's talking about private credit, but so of course it is private credit, it is tech, but the other thing, the thing that we're talking about right now is the K-shaped economy. The journalists can't get enough of it. Obviously, it has political ramifications. Right. It's real. It's not made up, but they are pounding it into the pavement. There was an article over the weekend, wealthy travelers are splurging on luxury hotels like never before. So it's showing the breakdown between cabin and coach and premier. And like, I'm over it. I'm not reading the article. I get it. Rich people are winning.
Right. And when have rich people not won, though? When has that ever been the case that rich people haven't been the winners in society?
Right. But I think it's having really gnarly effects on how we perceive everything because things are fine. And I know broken arrow here again. I'm not, we're not minimizing the challenges that the bottom 10% have. But when you look at the data, so we're basically done with earnings season. And okay.
But here's the thing. Here's the thing about the consumerism aspect of materialism. This is why social media is so bad for us, because we're seeing stuff where we weren't supposed to see. And I think everyone, the hard part for a lot of people is there are so many luxuries that turned into necessities now. And that's what makes life so much more expensive. It's not just student debt and housing. It's phones and internet and travel and
DoorDash.
All this stuff that people didn't have in the past, that you think like, if I don't have this, I'm never going to get ahead, or I'm not going to be living my best life. And so it's more expensive to live the way we live today.
That's right. Life was already ridiculously expensive in 2019 for most people. And then you got the inflation. So yes, a lot of things are totally effed, for sure. Like no doubt. But we heard from we heard from companies, and they said this is from Bloomberg, economic slowdown mentions are the lowest since 2007 on earnings calls.
Oh, from companies?
Lowest since 2007. Here's a few quotes that we pulled from the transcript. Those guys do great work. We mentioned them a bunch. Okay, this is from the head of retail banking at PNC Financial Services. We were just looking at this sort of deep dive on the October numbers, okay? October. Spending is robust. And while it's a little bit stronger at the upper end, it's still actually hanging in there among lower end customers. So that's been, frankly, given all the turbulence, perhaps a little bit surprising, even with the government shutdown. All right, Bank of America. I just got the October data, and the money movement to spending by these consumers was up 6% versus last October. Employment remains steady. We can see that in the paychecks coming into our customer accounts. That's Bank of America. Lastly, JP Morgan Chase. When we were looking at spend trends after a relatively softer, although still pretty solid second quarter, we've seen strengthening both in confidence, and that does continue into the fourth quarter. So this is, and I'm not minimizing how people feel. People are upset. Right. It's in the political data. I get it, but things are okay-ish.
So the thing that Steve Eisman said when he talked to you and Josh about how the government spending and debt is just virtue signaling, I think there's a lot of that goes on too. People
100%.
No
people
one wants
people with money talking about how the bottom 10% can't afford anything. It's like, dude, why do you care?
Well, and again, it's not like we don't care, but like I guess the point is that I don't think that this inequality thing is ever going to get better.
No, and we're fighting back against the narrative.
Yes.
That only the rich people who own stocks, which as you mentioned is 62%, only the rich people are doing okay and everybody else is dying.
We're trying to look at this more realistic.
It's not black or white. It's somewhere closer to the middle.
You're right. You go to a concert with 30,000 people in a stadium. Is everyone there in the top 5%?
Right.
Everyone? All right. Let's move on.
Okay.
Let's talk about the big tech stocks. We haven't talked about them yet.
Yeah, seriously. They're not getting enough love on this episode. All right, here's a chart from Ned Davis Research. The Mag 7 is now larger than energy, materials, consumer staples, healthcare, financials, utilities, and real estate.
Combined.
Pretty remarkable. But again, given the breakdown of all of the product lines at Apple that we spoke about last week, and you could do the same thing with Microsoft, you could break up Google, you could do the same thing with Amazon. They are earning as much money as the rest of the sectors combined. I don't have that data. I'm just saying, like, I'm going to guess it's about even. And guess what? They're growing 20% a year. So even though this type of chart can break one's brain, when you look at the underlying reasons, Mag 7 earnings are up threefold. This is from Uri and Timmer. Over the last 3 years, their earnings have tripled and the share price has quadrupled, which is exactly what you would expect, by the way. So earnings have quadrupled.
So these numbers are kind of insane to me. So healthcare is $5.2 trillion, okay? NVIDIA is essentially the same size as the healthcare sector. Financials is $7.5 trillion now. So NVIDIA is like a one good earnings day away from being as big as a financial sector. Holy smokes. It makes sense. It also hurts your brain to think about it.
Okay. Yes, it does. And also, what would you rather own for the next 3 years, XLF or NVIDIA? Now, what would you rather own for the next 20 years? Maybe that's a different question.
All right. We had that. This is a good thing. Like the Mag 7 versus this field here over the next 5 years. What do you got?
Over the next 3, I take the Mag 7.
Yeah. If you said the next 5 to 7, you might pick
over the next 5 to 7, I think I'd go the other way.
All right. We had a bunch of people chime in on the can Meta or NVIDIA fall 20 to 30% in a day.
I push back against 30. I push back against 30. If you said 20, dude, I would not have made a stink.
I said 20 to 30 in that range.
That's a huge range. That's a huge range.
What does the data show? Tell me what the data shows.
Okay, so the 2 worst drops for Meta over the last 5 years, it fell 26% one day, it fell 25% another day. Now, mind you, that's when at the 25% fall, Ben, the market cap was $280 billion. You're crossing your arms like you just
I'm like Leonardo DiCaprio with a cigarette and
no, but that's not, first of all, that's not 30.
Okay, so my kids in math class were learning about rounding up recently. If you have 26 and 25, what do you round up to?
We're not rounding up. This is not a round up exercise.
But
they did that. They did that when the company was a third of the size.
So the worst day for NVIDIA, I looked just at the 2020s. For NVIDIA was negative 18.5% that in the 2020s.
Because I'm just saying 30 is like an accounting scandal type of fall.
But it happens to individual stocks all the time. All the time. I'm going to put Chart Kid mad on this. Like, how often do individual stocks fall 30%?
It's not all the time, dude. It's rare. I bet you it happens 3 times a year. I'm making that number up, obviously.
Oh, way more than that. On a single day?
For an S&P 500 stock, or let's just say a mega cap stock. Now maybe I'm moving the goalposts, but these are mega cap stocks that we're talking about.
I'm thinking like Russell 1000. I bet it's dozens in a year fall 30%.
Yeah, I'm sure. Listen, if you're a $7 billion company and you overnight your 2, I'm sure that happens all the time.
Okay, so wait, you wanted people to pound the table on the bubble thing and say yes or no. Ben Thompson at Stratechery, he did this. He says this is a bubble, plain and simple. And I think it's great because I feel like a lot of the people in tech don't want to say that it's a bubble. They want to tiptoe around it. He's saying yes, and he wrote about the benefits of bubbles. And so it's funny. He said people have been trying to say this is. Remember Mark Cuban? I remember this one in 2015 said technology is a bubble. I don't know why that one sticks out to me in my head in CNBC. So people have been saying this forever, but he's saying no. This is obvious right now. This is a bubble. And he's saying the question is, are the benefits of the bubble going to be worth it? Right? All this money we're pumping in on the other side, do we get this AI infrastructure build out? That's the question.
Well, and a big part of that is some of the bubbles that lead to good, healthy things for society. Like all bubbles aren't bad, I think was the point of the post, but specifically debt-fueled bubbles, like what led to the GFC is a catastrophic crisis of epic proportions.
Right.
It's possible that that we get the bursting of a bubble, and so long as it doesn't bring down the financial system with onerous debt, and obviously that's a bigger part of the conversation, then maybe we get out of the other side. Okay.
But that's like the good part about this is the banks aren't in really. I mean, you could say private credit but this is not like a financial crisis level thing. This is stocks could fall a lot, but I don't know. I still don't think that this is like a nuclear level event if and when this thing blows up.
Okay, I hope not. I was thinking about this, like looking back at history, because I'm saying like, well, what would need to happen to prove this was a bubble? And I feel like once you start talking about like losses and fractions, then it's bad. So, for example, yes, like the Nasdaq lost a third of its value. That's a serious decline. I don't care if it takes you back to 2023. Like that hurts. A third. Imagine your account. Just close your eyes and picture the value of your account falling by a third. That sucks.
Yeah.
All right. So Derek Thompson had a great conversation with a railroad historian. By the way, Ben and I are recording with Derek this afternoon, talking about Are Young People Screwed? So I think that'll be out this week. All right. I feel like we never really talk about this because it's not like the most exciting topic. But in terms of the advantages that we have in this country, like, it's our DNA, it's our go-getter attitude. And like, yeah, that is all part of it. But simply this, So this guy's, I apologize, I forget his name. He said, by the end of the 19th century, you have a regulated infrastructure that moves across a continent. That brings a great American advantage into play. And here's the part that I'm talking about. The great American advantage, which we have over competing economies, is an incredible wealth of resources. We did nothing to create those resources, but we literally have with oil and copper, with agriculture and soil. Once the railroads can move these things effectively, we had advantages that nobody else in the world could match. Just our natural resources
Yes.
is second to none.
If you were to build a country from scratch, the U.S., you would have 90% of it is the U.S., right? We have the coasts on the side to protect us. We have vast resources. We have fresh water. We have all these things that are like natural built-in advantages that other countries would kill for.
Yeah, it's funny. We talk about like our culture as the exceptionalism. And obviously it's an offshoot of this, but it's really just the land.
Right.
All right. So getting back to
wait a minute. One big difference between, because I studied the railroad bubble too, and I wrote about it in one of my books. The biggest difference between that and, because people have been making this comparison, is that there was so much fraud going on back then. That was literally a pump and dump scheme. All of those companies were being pumped and dumped, insider trading. There was no rules back then, so it was all insider trading and dumping stuff off on the public. And so obviously, so that kind of thing isn't happening as much now. And there was a lot of that happening in the 20s too, because the SEC wasn't around yet. So if you want to make historical comparisons, that's important to note that a lot of this stuff was just the wild, wild west back then. And obviously there's stuff going on with SPACs these days that is not doesn't seem to be above board, even though it is kind of.
But not like this. Not
right,
like just outright fraud. So last week, Josh and I were talking to Eric Jackson about how it was the week that the world learned who Sam Altman was. OpenAI has been in the background. All of these announcements, sending stock prices soaring. I think it started with Oracle, maybe. Was that like the first gigantic holy shit announcement?
Right.
And he was on Brad Gerstner's podcast, and then the CFO said a few things that didn't land well. And everybody was like, whoa, 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 whoa.
Yes, the CFO made a comment that said like the government might have to backstop the financing of data centers. And then she immediately went on LinkedIn and said, actually, I'm backtracking that. But when they said that stuff, people pounced. And I say, OpenAI and Sam Altman, they're going to be the next tech villains. There are going to be a lot of people who completely hate this company. Politicians are going to jump on this because here's the narrative so easy to build.
Oh, yeah.
Wait. This company is enriching themselves and they're helping people lose jobs? Are you kidding me? Like Sam Altman is going to be a villain to a big group of people.
Yes. And yeah, so
whether that's right or wrong,
he's like, I can't wait to go public so we could kill our short sellers. And it's like, dude, what are you talking about? Like, huh? So anyway, so this historian said to Derek, transformative technologies are built by people who never underpromise. They always overestimate the beneficial consequences of what they're doing in the short term and underestimate the costs of what they're doing. He said, second, the people who hype these technologies, the people who control the companies that are seeking to master these technologies very often do not understand the technologies themselves. They can overpromise because literally they know what they want to promise to get financing and to get money and to get profits. All right, so obviously that's happening. Skipping along to the third thing. He said, these technologies virtually always become bubbles because they take on this belief that if you're going to change the world, if this is the secret to changing the world, everybody should get in on this. The railroads were the American stock market and the American financial market in the late 19th century. That's where the money went. All right, but you know what? You know what's different about this one than that one? When he said like everybody should get in on it, like they did in the late 90s, like they did in the railroads, everybody can't get in on this. It's too expensive. These data centers cost $50 billion? Like, it's not everybody getting in on it. It's the Mag 7 names. And who would you better trust to handle the future of our capitalist society than these companies?
In terms of at least growing profits and cash flows, right? I don't have a lot of trust in the common sense of our tech leaders. I don't think that they're going to be like looking out for humanity. But if you're a shareholder, then who would you better trust? Them for sure.
But look who's running Microsoft and Meta and Google. Like these are very accomplished people that have steered their companies incredibly
Plus, let's
well.
be honest, a lot of these people are like psychopaths or sociopaths. You've read the book, The Wisdom of Psychopaths, and how many people, I don't know, I think it's like 5% of all CEOs or something are literal like sociopaths or something. Like, and I'm saying this in a, I guess, a positive and a negative way. Like, nothing is going to get in their way to stop this, right?
No, I don't think so. All right. So this next segment is brought to you by PIMCO. I grabbed this chart from their advisor playbook. You can check them out over there. We'll link to this in the show notes. Obviously, there's all sorts of great resources for advisors from one of the world's largest fixed income managers. So check this out. They show today's cutting cycle in historical context, and they show where we are today, months into the cutting cycle, number of cuts, or I'm sorry, the effective, what does that say? The effective Fed fund rate change. And if you compare this to prior episodes, we're nowhere. And so we've done this. We've done these companies have built this starting in what was the middle or tail end of a hiking cycle in terms of investor enthusiasm and liquidity. And we haven't even begun to see the impacts of Fed easing and what that might mean to asset prices.
Right. So looking at it's kind of interesting that like the 1984 it took so long to get down. But yeah, there's a lot of dry powder here for the Fed to cut further if things should deteriorate. But I actually think that if this thing just stays pretty if it plateaus, that's probably better news than all of a sudden rates falling off of a cliff. I think that portends much worse news and an overreaction function of the economy's worse than people realize. Right?
So if Fed funds settle at 3%, and let's assume that there's no emergency cuts because the economy is tanking, does that support or not support higher prices?
Well, look at the two lowest cycles that they ever got. It's 2007 and 2000. So it's funny, we think that like high rates are going to be here forever now, just like low rates were going to be here before. Like, you really think 0% rates aren't coming back if we have a recession?
I don't think so.
I'm sorry, man. I would not take that off the table. If we go into recession,
zero.
Here's the thing. So in the next 3 years, I said this to you and Josh the other day. Trump is already promising $2,000 tariff checks, I guess, which I think
it's credits against their people's taxes.
Okay, whatever. I don't know if it's actually going to happen. Maybe it's just a promise. But if we get a recession in the next 3 years, do you think he's not going to just shoot bazookas everywhere of money and lower rates? And I mean,
I would hope that Congress has learned their lesson.
The lesson is if you throw money at a recession, it turns around pretty quick. And I think
no. Yeah, but hopefully the lesson should be no. Throwing money at the economy kills everything because inflation is worse than recessions, as Josh wrote over the weekend.
But I think once you're in a recession, we haven't had a recession in a long time. And I think the overreaction function will be really interesting to see because I just think, listen, whether you agree with this or not, we've kind of figured out there's going to be a ton of unintended consequences. But you really think he's just going to let the economy slow and not throw a bunch of money at it?
Well, I mean, listen.
No way.
Of course,
I think this is my baseline. You wanted me to stop Grindrup's hedging. Any recession we get will be very short lived because they're going to throw everything they can at it.
Whoever is in office is incentivized, obviously, to do whatever they can to mute the damages caused by recessions. And are these people? Is this economy? Is the society better equipped to do that than we were 100 years ago? Yeah. Obviously. So yeah, the market is rigged.
Yes,
in a good way. Yes. Thank God.
And there are going to be a ton of unintended consequences because of this. But you have to live in the reality that this is probably the world we live in now, where if a recession happens, there's going to be a boatload of money thrown at it.
There always is.
Act accordingly.
Recently.
All right. This is interesting from the FT. CapEx spending is on course to outpace cash returns to shareholders now. So they show buybacks, dividends, and then net operating cash flow. And the CapEx number is close to buybacks and dividends now, which is pretty wild. And I guess it's always been closer than you think.
Yeah, I would like to see the spread of this chart because so what?
Right. But so this is interesting. So you mentioned earnings. U.S. companies are reporting the strongest earnings growth since 2021. So companies are still making plenty of money. right? Profits continue to be. Chart Kid Matt had this chart. This is really
But
cool.
it is. But this is also part of the thing. Like, not to rehash what we just spoke about for the first 20 minutes of the show. But I think it's fair to say that corporations are out thriving, for lack of a better word, consumers.
Oh, of course.
Corporations are doing better than consumers.
Yes. Corporations have weathered this decade better than anyone.
Yeah.
Right?
And will continue to do so at the consumer's expense if necessary.
So imagine not wanting to take part in the stock market. This is why 62% of households are in the stock market, because good luck fighting these corporations that all they do is want to make profits. So Chart Kid Matt, who has his own blog now called chartkidmatt.com, looked at the returns of tech stocks based on higher or lower CapEx spending. And this is pretty wild. I don't know. I'm sure there's some way you could poke holes in this, but basically the higher your CapEx spend, the higher your returns, the lower your CapEx spend. And the spread is huge. It's like 40.
Wait, there's no holes to poke. This is merely the data. I think what's interesting about this data is that we spoke about Kai's post from a couple of weeks ago, who looked at historically high CapEx companies do not deliver great returns for investors. Now, that is historically true, and I'm not saying that it won't hold true for the next 5 years, right? Like maybe higher CapEx leads to low returns going forward. I wouldn't bet against that.
But this is another one that this time is different.
Well, just for 2025, it's different. I'm not saying that these companies, now that they are ramping up their spending, are going to continue to outperform. But in 2025, I mean, we know this. Obviously, this is very no shit. But it's very cool that Matt was able to show this. So companies that are spending more. So Matt broke it down. He gave us the names. So the companies in the quintile 5 that are spending the most, it's Intel, Oracle, First Solar. Okay. Akamai, Microsoft, CrowdStrike, companies like that.
I forgot Dell is a public company again. That's in there too.
And on the bottom end, all the way on the other side, are a bunch of companies that, frankly, I don't even know who these companies are.
Adobe's in there.
I know F5. Is that Intuit? Adobe, yeah. Palantir, interesting. Okay. FICO, whatever, doesn't matter. The point is, we know what the point is. It's enough already. We know.
And if you're an advisor and you haven't checked out Exhibit A for advice.com, Matt's doing wonderful things there. Chart Blast, charts of the week. Check it out.
Yeah, you damn right he is. Every week, it's not just a library of stale charts that update every day. Every week, we are doing a chart of the week that is obviously topical for you to share with your clients and prospects and all that good stuff. So check us out there. You have a free 7-day trial. So check it out. Okay, S-Tax, new monthly report.
Can't call it stacks, can you?
I won't do it. All right, this was surprising. From an age perspective, the most aggressively positioned investors tracked by Schwab during October belonged to Gen X. The least aggressive was Gen Z.
That's surprising to me. Huh. It does show that you can, because Gen X, when they were coming up they were just coming up, Gen X lived in their formative years in the lost decade, right? I've heard that's also the lost generation. But I heard from a lot of people say, I remember one person in particular told me, I started my job in 1999. By 2011, every single dollar I put in my 401k, it was worth the same as I put in. So I put $100,000 in. My account value was $100,000. I saved for 12 years and I went nowhere. And all I told them was just wait, because now all of those purchases over 12 years that went nowhere, I'm sure they're so if they stayed in and they figured it out, they did wonderfully.
Mm-hmm.
That's, as a young person, that's one of the better things that could happen to you.
Yeah. I mean, a lost decade comes with obviously all sorts of, like, you don't get lost decades in good times, right? So on the one hand,
30s,
you should pray for
70s,
lost decade.
2000s.
You should pray for lower prices, but obviously it comes with all sorts of gnarly side effects. So maybe not. All right. Young people are twice as likely to be unemployed. There's a lot of this talk coming on, right? Okay. So Chart Kid made me a chart showing the unemployment rate for young workers. So this is the group that's 22 to 27. Then he compared it with all workers. And the spread right now is 3.4%. Guess what the average is since 1990? 3.8%. It's lower than normal. And from 2009 to 2014, when it was really hard to get a job for young people, the average spread between the two groups was 5.4%. So I'm not saying that young people have never had it better, but this idea that they're like, that it's unfair now and that they're screwed, like, give me a break.
That's my point. Haven't young people always had it hard? Has there ever been a time where it's been easy to
always
be a
been
young
hard
person?
to be young. Of course. All right, this is great. This made me so happy. This narrative nonsense. So all of these fast casual companies, they're all getting killed.
Okay, hang on. I had something about that too. Let me put here. Keep talking. I'm going to put it up there.
Okay. Kava, Sweetgreen, Chipotle, their stocks are getting killed, which, by the way, these were expensive stocks. So that's part of the story. And then the growth has slowed because a lot of things. People aren't in the office as much, but people are like, I'm just not eating this anymore. It's too expensive. So, all right, Ben, you're going to love this.
Okay.
So Chipotle and Kava, both in the opening of their call, mentioned the struggles of young people in their pre-packaged written response, okay? So an analyst said, Brett, you mentioned younger guests in the prepared comments. And I don't know if that was a broader statement of the industry or if you're seeing something in particular with younger cohorts. So Ben, listen to this answer. This made me so happy reading this. Yeah, Sharon, for us, we're a bit idiosyncratic in that our costs accelerated in the back half of last year when many industry comps were decelerating. Oh, really? So maybe there's actual business stuff specific to you guys that's driving your results. All right, that's part one. Here's part two. So we're lapping tougher hurdles when most are having easier comps. So we don't want to overstate the challenges of the consumer. Then why did you lead with that in your prepared remarks? It's so easy to latch onto these narratives and blame that when really there are idiosyncratic things going on in your business.
So here, I have a theory on these. So I looked at this. So Kava is down, let's do a fraction. Kava is down 2/3. It's down 67%. DoorDash is down almost 30%. Chipotle is down 55%. Cheesecake Factory is down 30%. And Sweetgreen is down 87%. So these restaurant stocks are getting killed. Is it just as simple as, and I know, like you said, each of them has their own thing going on. Did they just raise their prices too much? Did people go, why would I do a fast casual when I can go to the brewery down the street and get a beer and a burger and it costs almost the same thing? Like, why would I pay for, I think they just raised their prices too much. Is it that simple?
Yeah, that's what happened to Starbucks. It's the same thing in McDonald's.
Right.
People just got fed up. It's too much. Then they changed their habits.
Yes, exactly. All right, let's talk about 50-year mortgages real quick. The housing guy, what's his name? Bill Pulte, said we're working on a 50-year mortgage. It's a game changer. People on social media went nuts about this thing. I think pretty much everyone hates it. I tell you what, I don't really hate it as much as most people.
Well, I was about to say, tell me where the hate comes from. I want to understand.
It's because it only lowers your payment a little, and you basically don't build any equity. Like it's almost impossible. I say the positive is like, listen, I want to fight inflation, and I want to have my payment be set. So I'm taking a 50-year mortgage. I'm going to move in 12 years anyway, 10 years, 8 years, whatever it is. I'm not going to build any equity, but I have it as an inflation hedge. So from that perspective, I kind of think like, oh, this makes sense. I just think.
Do people think that? Do people hate it because they think that that's going to only juice prices even more?
Yeah, people think, well, that means housing prices will just adjust higher, which I don't necessarily. I don't necessarily agree with that for sure.
I think that the majority of home buyers, in a normalized interest rate environment. Now, home prices today are ridiculous, but I'm just saying, all else equal, most people would not choose the 50-year mortgage because guess what? You're not building any equity. It's all interest. So I wouldn't choose a 50-year. I don't think most people would. But for people that are struggling to get into a home, yeah, the 50-year, I don't think it's the worst option in the world.
I think if we're throwing ideas against the wall here, why don't we just give everyone under 40, if they haven't gotten one yet, a one-time 3% mortgage if they miss a boat in 2020? Now, listen, would that juice prices? Probably, but it's like if we're throwing ideas against the wall, and obviously the obvious one is, well, why don't we just build more housing? Like that's the simple like solution. But obviously, for whatever reason, it's too hard to do, or we don't want to do it. So we're just going to throw ideas against the wall.
I am very much in favor of relief, home buyer relief for young people. I think this is probably the singular biggest issue in our economy.
Yeah,
right
I am
now.
too. I'm fine. And people say it's not fair. So what?
So
Life
what?
isn't fair.
So what? So I don't know what the solution is. I don't know what the unintended consequences are. I'm not like a housing policy wonk, but we got to do something.
Well, listen to this. This is from NAR. The share of first-time homebuyers dropped to a record low of 21%, while the typical age of first-time homebuyers climbed to an all-time high of 40 years. And this is the biggest cohort right now. Remember we said last week, 33 to 37 is the biggest age group in the country right now. This is us trying to have like some sympathy here. I agree. Like some people are going to say, I never got help when I came up. So what? You didn't deal with housing prices that rose 50% and mortgage rates that doubled either.
Yeah, no, I'm for this. I forgot to mention this last week. Matt Levine wrote about Brian Armstrong, who is the CEO of Coinbase. All right.
By the way, I tried to watch the new Superman and I couldn't do it. Brian Armstrong will make a great Lex Luthor.
Yeah, the new Superman was okay. It was watchable. Way better than Fantastic Four.
My kids actually liked Fantastic Four. They got into it. But yeah, I mean, do they have good taste in movies? No.
Yeah, kids like everything.
It's true. I made it 10 minutes into Superman. I turned it off. I don't care. The superhero stuff. I just don't care about.
All right, but wait, hold on. You just said it. That's a you thing. You can't watch.
Yeah, but a lot of people don't care about superhero movies anymore. Like, oh, you're going to destroy the world, and this big bad being is going to come and.
Ooh. But you were never a Marvel guy.
No,
Did you ever see like Avengers Endgame?
Yeah, I watched it. It was okay. When the guy snapped his fingers and everyone died, I knew the next movie was just going to be them turning time back.
You know what movie you want to see? You want to see Thanos in middle school, like awkwardly getting into puberty and realizing that like he actually does have something to offer to the world. Like that's.
No, I would like there to be some actual stakes. There's no stakes in these movies. Like anything that happens can be reversed. And so like this person died, let's just snap our fingers and come back to life. Like there's no stakes in those movies. So like why should I care what happens?
Fair enough. Okay, so Matt Levine. The main point I want to make here is that this is all so dumb and I hate it. Kalshi.
Talking about what?
I'm about to read it. Kalshi, a commodities futures exchange registered with a U.S. Commodity Futures Trading Commission, offers contracts on various unconventional commodities like election outcomes and football games. Last month, you could buy futures contracts on commodities like a Coinbase Global Inc. representative saying the words prediction market or Bitcoin or Web3 on its third quarter earnings call. Why? I don't know. To hedge your risk that Coinbase wouldn't say those words? To help people understand and price the future states of the world in which Coinbase did or didn't say those words? Because you were bored and liked to gamble, probably. All right. So the earnings call happened at 5:30 p.m. on Thursday. And here is the transcript that Brian Armstrong said at the end of the call. Did you hear this, Ben?
I know what you're talking about now.
Okay.
Yeah.
Here's a quote from Brian Armstrong. I hope we answered your question on that. I was a little distracted because I was tracking the prediction market about what Coinbase will say on their next earnings call. And I just want to add here the words Bitcoin, Ethereum, blockchain, staking, and Web3 to make sure we get those in before the end of the call. End quote. Dude. Bro. And dude, come on.
Yeah, not great. I mean, is anyone really being harmed by this or helped? I don't know, but why is this the thing?
But just why? Like, just who does this help?
I agree.
Aren't you trying to be the adult in the room and push the crypto industry forward? And you're like literally doing this.
It's like, this is the LOL, nothing matters, right?
Right. Yeah. It's just, come on. Do we need to make people more cynical?
All right. I'm starting to backtrack a little on the housing market. Like I was almost positive that during the next recession, we're going to get like a housing boom. Like the housing market goes into recession first, comes out of it first. Maybe that still happens, but I don't know if the animal spirits are going to be harmed here. So this is from Wall Street Journal. A bunch of people sent us this. Builders are offering mortgage rate discounts. Home buyers aren't biting. Okay? America's biggest builders are struggling to sell homes even when they offer buyers a 4% mortgage. Their experience suggests that rate cuts alone won't be enough to boost weak sales in a wider housing market. So you can see the number of completed unsold homes is rising very fast. D.R. Horton, which builds roughly 1 in every 7 homes in the U.S. and has its own financing arm, is offering 3.99% mortgages to buyers. That's a pretty darn good deal.
Yeah, it is.
The company has also knocked off 3% of its average selling price in the past 12 months. And it's not working. It's not helping.
Somebody emailed us and they were like, guys, it's not just the price of the home with the down payment. and of course the mortgage, which is ridiculous. It's also like insurance and all of the other costs. It's everything. So it's
Yeah.
not just the mortgage rate. Um,
So does this
I-
mean that housing prices have to fall to like create a better equilibrium? Or are we
you
just going
would
to have
think,
no housing activity?
but they're not falling.
Yeah, they're in some places. Texas and Florida, they're falling.
True. I could be wrong. I still do believe that at some point there is a rate. I don't know where the line is at which it's going to be like the spark that lights the fire. But maybe not. Maybe home prices need to come down.
Here's the thing. If I'm in the market though, I'm buying a new house over an existing home. Buying a new house is such a great deal because like you're just all the maintenance for like the first 10 years, you're washing your hands of it. So they were saying, listen, part of the problem with new homes is that they're not in very desirable areas sometimes because there's no place to build them in the best areas. So sometimes you have to like go further away to get a new home.
All right, Ben, can we do an ask the compound style question? I'll be Duncan.
Okay. Let's do it.
Okay. My wife and I are in our early 50s, 2 teenage kids. My wife is a part-time teacher planning to retire in 4 to 5 years. I made a career switch 2 years ago to pursue my passion, knowing that I would be bringing home significantly less income in the short term and potentially not recovering the difference. Okay. Our household income prior to my career switch was $180K. You taking notes?
It's up here.
We do not have a mortgage on our primary residence, $1.3 million. We have 3 rental properties valued at a combined $2.2 million.
Nice not to brag here. Okay.
We have retirement accounts combined, total estimated at $2.3 million, and a brokerage account, cash assets combined at 1.5. All right. So these people are financially good.
Yeah.
Like they are in a very healthy spot. Making their career jump created a shortfall between our expenses and our income. Yes, we could cover the difference by tapping into our cash or pulling back some of my wife's pre-tax allocation to a retirement account. 2 years ago, we decided to pay off the only debt we had, which was a 2.625% mortgage. On one rental property with 10 years remaining on the loan and a loan balance of $130,000. The monthly mortgage payment was $1,200. Prior to paying off the mortgage, we were net positive about $6,000 per year on this property. Okay, I mean, this is all the right things. Do I even need to read the rest? Like, do you still have any issue with this, Ben?
Well, he says, in my mind, we took $130,000 and are getting an 11% return for the next 10 years. Maybe this is distorting thinking, but at the end of the day, we're still getting $14,400 more in income for the next 10 years. No? Love to hear your take, especially Ben. I feel like people twist their brains in pretzels for this stuff. So they have a shortfall in income. They need the income, right? They decided, well, if we pay off the mortgage early, then we'll have the lower monthly payment. So then that can be a form of income. What if you just kept the $130,000?
But people like the income. I know.
Keep the cash. If you have, especially if a shortfall in income, you're trading that cash now for future monthly payments that aren't going to happen way off into the future. Time value of money says you're better off keeping that $130,000 just in cash.
You're right, and the flexibility of it all.
Yes.
But I think what we keep learning over and over and over, and is that the psychological component of the money on a monthly basis matters so much more than what's sitting in the bank. The psychological goodbye debt.
Right. And I've already I know that I'm never changing anyone's mind about this, but
yeah.
He twisted his brain into a pretzel here. He could have just kept the cash.
I think that I would be more like emphatic and like taking the person by the shoulders and shaking them, like in Billy Madison, or the cheeks, I guess, in that case. If you are not in this person's position where they have the portfolio,
they're going to be fine either way.
Yeah, but if you're talking about somebody who's like, listen, who's like, I have $30,000 in savings, and it's like, no, you are making the wrong decision, and it's going to impact your life.
Right.
Obviously, that's not this. Okay, I want to talk real quick about some of the stuff we saw in Vegas.
Yeah.
And the juxtaposition between what we're hearing from Robinhood. So Vlad said, prediction markets are really on fire. It's hard to believe we launched this year just about a year ago, and we've doubled volume every quarter since then. That's crazy. People really love gambling that much? I mean, predicting that much?
I know. Is it just so you can say you were right? I know the money is part of it, but here's what I told you. Like walking around Vegas and seeing all the debauchery there, Robinhood should have a bucket shop in Vegas. You should be able to go in there and trade penny stocks on like 50 times margin, and like there should be a Robinhood bucket shop in Vegas. We were walking, and I'm almost like, if we're gonna do this, let's just do it. If everyone's gonna be degenerate, but you and I were walking around the MGM Grand, and they had this enclosed space with all these people, and it was these people talking to cameras, and they were dealing, and they were dealing card games, and they were doing roulette, and they were doing, I don't know, all these other games, and they were talking
They're in
to
a glass box.
yeah, in the glass box. Talking, there was 12 games going on, and it was people on the internet playing these games live. So you're on a camera, and the dealer's on a camera, and you're playing against them.
No offense, but I would have loved to see who's on the other side of the camera.
So that's massive. See, because that's just such a degenerate move, because one of the great things about going to the casino is that you get the smell of the place. You get all the noises around you. When you're playing blackjack, you're not just there to play the cards and win the money or lose the money. You're there to be with other people, and
it's an experience.
Yes, that if you have a good blackjack table and you're with your friends and people are yelling, and I love it when you have a 16 and you hit and you get a 5 and everyone goes, "Good hit, good hit." And if you tap the table because someone got an ace for good luck, and like that's the part. It's the camaraderie of it. It's not just the straight cards anyway. I do have one thing. I wanted to go over, I always do this for people you see in an airplane, people you see at a resort. I have people you see at Vegas. And a lot of this is colored by what we saw. But so there's always the one old guy at the blackjack table complaining. We had this guy, right? Like, I'm playing it right, and I can't believe it. When I played a little bit after you left, and I had a guy, he literally had the card. You know, the card that says when you should hit, when you should stay, when you should split. And he's following it to a T. So he's playing the right way. And he keeps losing, and he's getting madder and madder. And he points to me and goes, "Why is he winning and I'm losing?" To the dealer. Like, sorry, sometimes it's just random. There's the one guy who drops $8,000 to $10,000 on a card table and doesn't blink. Just playing massive hands. Money's gone.
Just gets up and leave.
Yeah. There's always a group of dudes who are inappropriately drunk at like weird times. Right? We saw like 5 dudes walking through on our way to dinner, and they had a case of Pabst Blue Ribbon on them, and they were annihilated. And it was like 4 PM.
Wait, the beers fell out of the case.
Beers are falling out. There's always one lady, like a group of ladies there for a bachelorette party or something, who keeps shouting about getting a drink. Like, "I need a drink." You know, there's that lady. And then, of course, there's just the zombies at a slot machine, right? Like their eyes look like they're like. And then, let's see, people playing craps at 9 AM. That's a person. And then I love the people when you're leaving for a flight at like 7 AM, and there's people literally coming home to the hotel at 7 AM at the same time as you. I'm sure there's way more than that. But Vegas is a great people watching place. Here's one thing I didn't know. You can literally, how many times did they ask us for a massage at the table? If you're that sore from gambling and you need a massage while you're playing, you might have a problem. I don't know. Anyway, but for us, everyone keeps saying Vegas is in trouble. Vegas was bumping when we were there.
Oh yeah, that's what I want to say.
Busy. So
you look at a chart of Caesars, and it looks like the stock's going to zero. And Caesars is the most exposed to Vegas compared to like Wynn or MGM or Las Vegas Sands. And it's easy to conclude that the consumer is dying. It's like, wait a minute, no, they're not. They just aren't going to Vegas as much as they used to for a various host of reasons. It's expensive as shit.
It's really expensive there. It's really expensive.
I got a grande coffee for $9. It's just like, come on, you're just robbing me. But did it feel like a recession there?
No, it was. People were dropping money left and right, and
did it feel like Caesars is in an 80% drawdown?
Yeah, we asked the dealers like, "What's going on? Is it busy?" And they said, "Yeah, right now there's a lot of stuff going on." I don't. Maybe it was just because there was a big conference week or what. But I was surprised. I thought it was going to be a ghost land.
Yeah. So I'm not here to say that Vegas is killing it, but this idea that like nobody's there anymore, just not true. All right, great stuff, Ben, on the Vegas. Just I wanted to mention Robinhood real quick. Their net deposits in the fourth quarter or in the third quarter were an all-time record. Up 29%, $20.4 billion.
I'm sure they have a ton of people that are just auto contributions in, right? And every time they get a new client, that's what happens, or a new customer.
Here's a face-blowing chart. Look at their margin revenue. $153 million. And the next chart shows their margin book, not surprisingly, $14 billion, an all-time record there.
Wow.
Robinhood is killing it. They are on
See,
fire.
they need to do the bucket shop thing. People would love
They're
to
on fire.
borrow more money from them. All right. Good news. My auto insurance went down for the first time in a long time. They didn't even have to haggle.
Oh, it's great. Great.
I didn't have to like go to, and not a lot, a little, but the Wall Street Journal had a story saying that car insurers are under pressure to cut rates. They're basically saying there's been more competition and people are shopping around more. So that's causing these auto insurers to lower the rates. So it's finally the inflation on this stuff that spiked and it was massive. We talked about this being like a crisis level event. It's reversed. So that's good.
That's great.
Good news.
That's great. Ben, I'm new to the vest game. I know you've been a vest guy for a long time.
That's kind of surprising, you going to Manhattan all the time.
Yeah, I'm new to the vest game. And I don't like vest guys. Sorry. I mean, I have a lot of friends that wear vests and I like them, but just the idea of vest man, I don't like vest man.
Well, if there's 4 guys walking and they all have khaki pants on and a blue shirt and a vest, you judge those guys.
So there was 2 vest men on the flight as we landed. They got off. They're standing up talking to each other.
Vests are great for wearing on planes, though.
Hang on.
The pockets keeps you kind of warm.
I've got a positive coming up. So so vest guy number 1 goes, so how was the conference for you? You coming back next week? No, I don't cover retail anymore. I only cover this sector. So they're rich guys. Where are you going tonight? You going to Greenwich or Manhattan? I'm like, dude, you don't just say that out loud.
So they're stereotypical vest guys.
Stereotypical vest guys. All right, but I'm a vest guy now for various reasons, but here's a great reason. I don't know if you could tell, probably can't, maybe you can. I've put on quite a bit of weight recently. I'm afraid to look at the scale. My eating, which was on track, has fallen off an absolute cliff. It's a nightmare. So now you could wear a vest over a t-shirt and hide your belly. So that's what I'm doing these days. I wear because my t-shirt,
puffy vest really can hide a lot.
My stomach is not looking good at all. Neither is my upper chest area. So the vest hides the.
What happened to your personal trainer?
Oh, I stopped that a year ago. I don't have time for that.
Okay. Yeah, you do. You can find time to work out. All right.
No, I can. I just don't have time. I don't have time for a
survey of the week from Washington Post.
A weekly trainer. It's too much.
3 in 4 Americans want to reach their 80th birthday, but less than 30% want to live to 100. The typical American lives to 78. The ideal age on average, according to this Pew survey, is 91. So what do you think is the best age to die? Very morbid question.
84.
Okay. So my dad talks about this a lot. My dad is approaching 80. He's always said, like, I don't want to live past my 80s. I don't want to be seeing people that just fall off a cliff and deteriorate. He always says, I don't want to get past that point. He's said this multiple times.
Yeah, but your dad's in good shape. Would he, if he could live to 90, if he could live to 90 and not be a corpse, I'm sure he would do it.
It is kind of crazy. My dad is almost 80 and you'd look at him, you'd probably think he's in his 60s. He tans immediately.
My stepfather is 85 and the guy's a Hulk. You would never know.
My grandfather died at 76 and he looked like he was 110 because he smoked his whole life and lived a hard life. I think 85 is a perfect age. Don't you think? You don't say oh, they died at 85. They had so much more life to live. I think 85 is the perfect age to die.
Yeah, it's a great age.
Because I feel like in the 90s, you're having people take care of you.
Yeah.
Right?
Yep.
All right. Let's do some recommendations. I watched Pluribus on Apple TV. A bunch of people were talking about this. It's the new show from Vince Gilligan, the guy who did Breaking Bad. Okay. Did you watch any of this?
No, I'm very excited though.
I think it's one of the best pilot episodes I've seen in the last 20 years.
Ooh, what? Whoa.
I mean,
Thanks for raising my expectations.
I don't want to raise them too much, but it's just one of those shows that
one of the best pilot episodes in the last 20 years.
Here's the thing. I'm worried that the idea of the show is I don't know where they go from here. It felt like a blockbuster movie, but the show starts and it goes and you're like, oh, okay, but you're in good hands. It's why you don't need to be worried. I'm a little concerned that the show is going to peak in the very first episode. And the second episode I watched, it was good too, but it's just the idea of what happens is kind of mind bending. And so that's all I'm going to say. It was listen, Lost is probably the best of this century. Lost is probably the best pilot episode I've ever seen. Homeland's probably up there. I'm trying to think of what else, but
I remember watching Homeland in my bed.
Just in terms
house I grew up in. That was a great pilot.
Just in terms of what could happen with this show, whoa, this is mind-bending. Very good. You said you watched The Materialist on their flight, so my wife and I watched it because it was on HBO.
What did you think?
So it's not a rom-com, it's just a rom. And I thought, man, this movie feels familiar. It's the same woman who wrote and directed Past Lives, which I loved. I think that was one of the best.
You did love that movie.
That was a very good movie. Materialist, I thought was just okay. Like we're talking like a 6.2. It was. I thought the ending was like completely obvious and telegraphed and not original. And I had a hard time buying Chris Evans as like this down on his luck guy who lives with roommates.
It made no sense. So I thought that Materialist was, you nailed it. It's a good airplane movie. What is an airplane movie? It's a movie that you watch on an airplane that you wouldn't enjoy that you enjoy on the airplane that you wouldn't enjoy on your couch. So I had an okay time watching Materialist, but Pedro Pascal, horrific, and Chris Evans maybe even worse. So the acting was terrible.
I thought the first half of the movie was kind of intriguing, but
yeah, the first third was great, and then it was miscast.
Spoiler alert: she's not going to end up with a rich private equity guy. Come on, who has a $12 million apartment in Manhattan? That's not realistic.
Airplane movie.
Okay, so it was okay.
I have a plug. I plug Tommy John undershirts. I'm going to plug this. We don't have a TV in my kitchen. So we got the new Amazon Echo Show, which is like a 15-inch, I think. It's like a 15-inch screen. And they even have so you have all the apps in it. So the kids could watch Netflix, Prime, Disney, whatever. They even have like an Amazon channel guide, which I just discovered yesterday. Pretty interesting. But it's perfect. It's perfect for the TV. It swings around. It's great.
And you can use it for other stuff too?
It's an Alexa.
Okay.
It's an Alexa that also is a TV.
Oh, interesting. Okay. I like that.
It's great. Cool idea. It's really great. Okay. All right. You ever notice something about yourself only after somebody points it out?
Mm-hmm.
So I was telling one of our guys, Kevin here, about a movie that I was watching. Kobe woke me up early. I was up and I was downstairs at 6:15 and I fired up a movie called Sovereign, with Nick Offerman, which is not a movie worth watching. But Kevin's like, you really watch a lot of movies in the morning, don't you? And I said, yeah, you know what? I have really strange movie watching habits because I rarely watch a movie in one sitting, which is maybe part of the reason why I really love watching movies in the airplane or in the theater. But almost all of my movies, I'm watching like 20-minute chunks, an hour chunk, a 15-minute chunk.
See, I can't watch a movie in the morning. I'm not a morning person. I can't, my brain's not ready to dig in yet.
So, yeah, that's me. I said it. All right, Guillermo del Toro. I have very mixed feelings on this guy. So he did the new Frankenstein movie. And it's funny, I always thought that I hated Guillermo del Toro because he did a lot of stuff that I don't love. I didn't love Pan's Labyrinth. I know why people like it. Shape of Water got panned. I never saw it. It just looked weird.
Oh, that was awful.
I never saw
Hellboy. He did that.
I don't know anything about Hellboy. It might be good, but it just turns me off.
I actually watched Hellboy. It was okay.
Okay. And then there was a TV series on FX that he made. I think it was about vampires that I just didn't really like. But then he did make some stuff that I do like. I didn't realize that he made Mimic. Do you remember that movie in 1997?
Yeah.
That was good stuff. Nightmare Alley I liked. There was one other thing that he did that I liked. So maybe I don't hate him as much as I do. So anyway, the point is this. I went into Frankenstein with zero expectations. I'm not a big Frankenstein guy, right? It's not a monster that I particularly care for. Oscar Isaac is Victor Frankenstein.
What monsters do you care for?
Aliens.
Okay.
Big aliens guy. Although I would put the monster villain like Freddy Krueger. I know he's not a monster per se.
Wait, so would I like Frankenstein or not?
Maybe. Okay. Well, it's not very good. Okay. But it's also way too long. I think I fell asleep a few times. This took me 4 different times to watch it.
You're not selling it very good. It's not very good and it's too long.
I watched it in the hotel.
Other than that, how was the show, Mrs. Lincoln?
No, yeah, exactly. No, but it was okay. There was some good stuff, some bad stuff, some silly stuff. Made no sense. But the point is this: it was watchable and forgettable. So you could skip it, Ben.
All right,
you could skip it. All right. Lastly, I know we're going long here. Sorry, Duncan and team. 2 pretty good airplane movies. Number 1 is Americana. You ever hear of this one?
Mm-mm.
Okay, so Americana movie is with Sydney Sweeney. Maybe you've heard of her. And it's a new movie. It's 2023. Not that new.
It's kind of funny that she's just a bigger hit. No one ever sees her movies or hears of them. Her boxing movie this weekend totally bombed, but she's still this massive star.
Well, nobody wants to see her box. No offense. The movie with Glenn Powell was a smash.
Yeah, I like that one.
All right, Paul Walter Hauser. You like that guy?
Oh yeah, big dude. Yeah.
So this is like a Western crime, Western thriller. Good airplane movie.
Okay.
And then O, comma high was a fun little, Google this, Ben. Tell me what you think. O,
Okay.
comma high. Is it the best movie? No, but it's a good airplane movie. Oh, you love this guy.
Oh, rom-com.
This guy, Logan Lerman, was in The Perks of Being a Wallflower.
I like that movie. Okay.
You
Say
love
no more.
So Isaac and Iris's first ever romantic getaway hits a block when Isaac casually confesses to not wanting a relationship. To what lengths will the desperately single Iris go to convince him?
Okay, I'm in. It's a rom-com, huh?
It's good. It's fun.
Okay.
It's okay. It's an airplane movie. All right. Thank you everybody for listening. Thank you, Duncan and team, for editing a long show. Animal Spirits at thecompoundnews.com. We love hearing from you guys. Please take the survey. It would really help us out. And we'll see you next time.
Check out Talking Wealth this week. I'm talking to Colin Roche about how he transitioned from writing about macroeconomics to running his own firm and then starting his own line of ETFs. Good stuff. See you next time.